Alright guys, welcome to this new video where I'll share you how I exactly trade after more than 5 years of experience in the market. So for people that don't know me, my name is Jem. I'm a Swiss trader that currently lives in Switzerland. I've been trading for 5 years and I just trade using a simple framework that helped me achieve more than 5 figures in trading profit. As you can see here in the picture, there's all like a lot of my payout certificate that I posted from the previous years, and I'll show you how I achieved them, and I'll show you what is my system and how I trade today using a simple stupid strategy that anyone can replicate. Alright guys, so for the strategy part, you only need two type of candlestick that happen consistently in the markets, and it's just a bearish hammer and a bullish hammer. And the reason being is pretty simple. Essentially, this type of candle really show us a lot of important thing happening in the market. First thing off, for a bearish hammer, what happened essentially, if you zoom in, what happened is that we've got a price that went lower, then came back and reaches higher, and it's usually considered a bearish sign of reversal. And essentially what will happen is that most people, when they see this, they'll just be looking to directly sell. They'll be like, all right, I've got a bearish hammer, I'm just gonna sell, put my stop loss above. And usually what will happen is that price will end up coming back and stopping them out here and then reversing because we take their liquidity out. It's essentially, when you have this candle, you know that there's going to be liquidity playing around, and usually that resting liquidity is resting at the high of the candle because that's a bearish candle. So above here, you're going to see that there's going to be a lot of liquidity and a lot of stop loss resting here and a lot of orders that we can grab. And usually what will happen is that price will tend to come up there to this level and stop out people. And it's the same for the bullish pattern here. Like countless time you've been seeing like these candlestick, and you're like, whoa, price is doing a hammer, it's time to buy. And then guess what happened? You enter here, price come, maybe go up a bit, manipulate up, fake out people, then stop you out, then go up. It's because like when you've got a lot of order gathered at the same place, well, price will just come out, take this order, grab liquidity, and have fuel for the next move. So I'll base my trading, most of my trading model around these two, but there are a couple of conditions that I use just to be sure that I'm trading with the right candlestick. First thing off is that price, like the body candle, must be closing above 70% of its total size. Essentially, we want to be marking the high to the low, and we want to be seeing the body candle here close above 70%. It's really important. So I'm going to write it out, take note guys, it's really important. Body candle must close above the 70% mark of the total candle length. All right. And what we will be doing around those is that whether if you are a bearish candle, what we will do, well, obviously we will mark the candlestick high like this with a key area, and we will be marking the candlestick low for the bullish candle like this if you have a bullish candle. All right, so now how does this thing look like in the market? Well, I just grabbed GBP USD because I just saw a perfect setup that align with what I just showed you. We've got a price that created what? We have price on the 4-hour that created a beautiful bullish hammer. We tested out the Fibonacci tool whether it's respecting 70% rule or not. So as you can see here, we are respecting it. So that's the first check. So let me write it out. First check, 70%. Here, yes. Second check, do we have price coming back to the low of the candlestick? Price retrace and grab liquidity. Yes, again, we clearly have price teasing around this level, like we come here. A lot of people are buying, as you can see. As I said before, price usually go up a bit like this, then start going down, start faking people out. A lot of like trader that I don't have discipline would just be buying here because we're clearly in the bullish trend. We're having bullish market structure, as you can see on the left, but they don't have the patience to wait because they don't know what we know, and it will just be faked out. But us, we will be waiting for price to come to the low of the bullish candlestick. And once price come here, what I'll be looking for if I'm on the 4-hour time frame, because the higher the time frame, the better it will work, obviously. But what I'll be looking out is just for a simple entry model, like simple inversion model. So what I'll be doing is like, I'll usually mark a bearish fair value gap. The bearish fair value gap has to be above the key area. So for the entry model, the bearish fair value gap has to be above the key area. It should not touch it like here, because as you can see here, we're gonna have a lot of fake out usually happening, or like we'll have a bigger stop loss if it touch it, or if we're below it, there's gonna be a lot of fake out. So price must be above to really sure that price is retracing back up and have grabbed the liquidity that are below, because we're gonna have a lot of stop loss below this level because it's a 4-hour candlestick. So as you can see, we would grab all the stop losses of all the people that had no discipline and that bought too early. So where's the paint? I always lost myself here. Alright, so as you can see, we would have grabbed a lot of the liquidity, and as you can see, we got such an aggressive move. Like we grabbed so much liquidity as we were going down, and as we collected all this liquidity, price started going up. And what we want to be looking at is an inversion model. We want to be seeing a IFEG, and we want to be entering at the retest of the break of the fair value gap, like this, and you would get an amazing entry. And again, this worked many times. Let me find you another example on GBP USD again. Let me go left. So do we have any bullish hammer? So. Yeah, I know it takes time to find them, but because it's so high quality. All right, here. Again, what happened? We're bullish. We have a bullish hammer. We mark it with the Fibonacci. Is it above 70%? Yes. So what we'll do is we'll wait for price to come back below to the candlestick low for price to retest our key area. As you can see again, guys, like we have the hammer. Maybe a lot of people are buying. That's why price go up a bit, and then boom, suddenly retrace back down. So I'll go on my 5-minute, and I'll be marking the first fair value gap that is totally above the key area. So that'll be this one. And what I'm going to be seeing is a break. So here we got a break. I enter the retest here. Stop loss at the key area slightly lower, and you can just target like the first structural high that we got on the left, like here. Just target this, try to get a 1 to 2 hour at least, and boom, again, like price just come here, amazing entry, another win. Let me find another candle. So as you can see, it's totally raw. I don't know what will happen. Okay, we got many candle. Let's see this one. So obviously sometimes we'll lose, sometimes we'll win. Just manage risk and you'll be good. So I try out this 70%. Yes, no, yep, 70%, perfect. I mark the low of the candle. Again, price here, like a lot of people would just buy down there. But there's stop loss here. We would grab it on the right. So price come here, and we will look for the entry model again. Like it's really consistent, it's really mechanical, but it's so powerful, guys. I just want to emphasize on that. Okay, the first IFG, the first fair value gap that we have is here. Boom, wait for the retest, be mechanical. Stop loss kind of below like the carry. Obviously, I will not have 2 pip stop loss. I can put it below the structure maybe. And again, we can potentially target this high. Just try to get at least 1R, and you'll get like really good results. Like as you can see, boom, price went up again more than 2-3R. Usually the least I would target would be 1R, but try to go for 1 to 2 at least. And yeah, that's something pretty simple that I use consistently. And as you can see, we just went up like pretty much a lot, and we would get like crazy precision. And yeah, I just proved the point that I made before. There's a lot of resting liquidity below from this level. But note that we can engineer this in a smarter way. We can also be potentially being like, okay, if you have confidence to sell here, we could potentially target this level because we know there's a lot of liquidity down there waiting for us to grab it. So once we have potential confidence for reversal, we can potentially take a reversal entry. Or we can potentially target this level as a consistent way of getting take profit. Do you know where I'm coming? Do you know where I am going to, guys? Like in the next video, I'll try to explain how we can use these area as take profit area and how we can get more entry by trying to catch reversal by targeting these. But that'll be for next video. But it'll get deeper, guys. It's not. I'm not just doing this because there's so many more things that you can do with this system and strategy, and you can make it work on any pair. Like it can be Bitcoin, can be gold, can be NQ, whatever, guys, you've named it. It's really powerful. All right, guys. So now we'll try to find a bearish entry model. So the bearish hammer that I was talking about before, we'll try to find some on the 4 hour again. So it's pretty fairly easy. So everyone can do it. It's really mechanical and yeah. Alright guys, now for the bearish hammer. So I just switched pair to show you that it really work on like most pairs. Like we're on USD right now, not on GBP anymore. But as you can see here, we've got a bearish hammer. So I'll just be marking it out with my Fibonacci. So did we close above the 70% mark? So the 0.7 mark. It's a bit tricky here. Let me zoom in. So like this, we're resting mechanical, and yeah. So yes, here we clearly close above, so that's great. As you can see, just yeah, pretty much close above. All right. Again, what I will do is like I'll just wait for price to come back up. So as you can see here, you'd be selling. Most people would be selling. Price go down a bit, fake everybody out. You go on the 5 minute again. You look for IFG that is below. So where's the first fair value gap that is bullish that we could inverse? It'll be this one here. It's really small, but that's fair value gap. So we'll just mark it out. And yeah, if you're in long again, if you were in a long, you'd potentially just target this key level here. But yeah, that's for another video. We wait for price to inverse. Boom, again, price inverse. Enter as price inverse. Stop loss key level. And try to target logical area, so it can be lower low, can be a low in the market, but at least try to get a 1-1R. Like as you can see, guys, like since before, all the trade that had 1-1R would hit TP. You can just try it yourself and just target 1-1R and you can get a really good win rate if you combine 4-hour candlestick that I just showed you and 5-minute entry model. Boom, let's target the low to get a better risk reward, like 2.86. Okay, so price playing around and boom, perfectly hit the low. As you can see, I'm not inventing thing. Perfectly hit the low, and you just take profit and make more than 2.8R, and that would be like at least 30% validation of a FTMO challenge, for example. You know, guys. Alright guys, so here I found another bearish hammer on the 4-hour. You want to be again marking with the Fibonacci tool whether we close 70% above or not. So here we did close again above. So what we'll do is we'll mark the high, wait for prices to come back above, and we want to be selling. So we go on a 5-minute here. We just got a fair value gap created here that is clearly below. You mark it out, you wait for a break, inversion, and you enter. Stop loss kind of above the Kyria plus some buffer, obviously, to be safe. All right, and we got another beautiful entry. You could target like these low here on the left, just to be safe, have clear, take profits. And yeah, that's something that I love to do essentially, guys. I love to use these candlestick for potential entry because it's really powerful. It really works. It's a systematic way of marking liquidity and getting reversal entry from. I love to do this, and you can do it. It really works, guys. And I just show you the results. I show you the prop firm certificate that I got, the payout certificate that I got. It works. So really try it out, test it out on your side, and you'll see it work like wonders. Alright guys, I just switched to the 1-hour time frame. I'm on Bitcoin right now, just show you that it worked. So here what happened is that we've got multiple bullish hammer. So if I just mark the first one here, we close 70% above? Yes, no. Yeah, we did. So I would just be marking the low of this candle. And again, the only time frame where I would use this is 4-hour, 1-hour, M30, and below that is just entry confirmation. Like the M15, 5-minute, 1-minute would just be for entry confirmation. You just be looking for reversal happening here. But again, if I mark this and I go on the 5-minute, I look for inverse for value gap. So not this one because it touched the Kyria. We don't want this. So yeah, potentially this one. Okay, so we take a break, you wait for price to retest the key level, you put your stop loss slightly below it. And again, for take profit, as you can see, that's why you put some buffer. We almost got stopped out, but we didn't. And our ID is valid, remain valid. So what I would do is like, I try to at least get 1-1R. So yeah, let's try to at least get a 1-1R or more. We can potentially also target like higher mark here. See, it will work. It should work. And yeah, again, price is going up, playing a bit, but you would hit take profit, and you don't need to use your brain, you just need to be patient. But the stop loss below the key area, target a area where you're comfortable taking profit out. Can be 1-1R, can be 1 to 2. It's really up to you. And you see that these, like we always have reaction in these candlestick area. Like whenever we retest this area, we have reaction happening. That's what I want to point out in this video. That should be a key concept that will help you build a system around these. All right. Alright guys, so that was pretty much it from this video. I share a lot of information, so I really want you to retest those. I really want you to backtest and try it out yourself, and you'll see that you're gonna have like a good reaction from these area in the market, and that's a consistent way of marking liquidity for potential profit target and a consistent way of getting reversal in the market. If you combine it with the entry model that I just shared with you, it worked for me, so it should work for you if you apply it with discipline. So that's pretty much it for this video, guys. If you loved it, don't forget to like the video and say it in the comment what I should do next. And thank you for the support. Thank you so much, guys. See you next time. Bye.